Time for the ETF report. Our guest says January was an extraordinary month for the ETF market, with almost $30 billion pouring in across a variety of asset classes and geographies. $27 billion in inflows. We're joined by Valerie Grimba, Director of Global ETF Strategy at RBC Capital Markets. Great to see you. I mean, thanks for joining us. January was a good month for stocks. And ETFs sucking up yet more capital.
Yes, thank you so much for having me, Andy. January was, again, nothing short of absolutely incredible. And at this point, I feel a bit like a broken record here. The boy who cried wolf, or potentially the girl who cried, ETFs are going amazingly. But I do want to contextualize that almost $30 billion number. It's such an incredible record. Last year, the kind of monthly run rate, which we thought was impressive at the time, was about $10 billion every month into ETFs. So to hit $27 billion in the month that was January. So listen, yeah, generally it was risk on, but there's still a lot of volatility in the market. Macro conditions are very interesting and very uncertain as well. And January is also not typically a seasonally strong month for ETF inflows. So I think all of those things combined makes January even more impressive than just the headline number as well. And I think we can attribute that to multiple factors, but really it's kind of everything firing on all cylinders. So as you mentioned, it's all across all asset classes, across multiple geographies. And we're also seeing interest from all the different kind of investor segments. So sometimes ETF inflows can be driven by institutions putting very specific exposures on. But in January, it was institutions, it was retail DIY investors, and it was financial advisors. So really broad-based interest. And another fun fact about January is the incredible breadth. So over 2/3 of all Canadian listed ETFs saw inflows in January.
Just remind us, what does it mean when we say an ETF has inflows? What's the mechanism?
Yeah, that's a great point. So what we classify as an inflow is net new money going into the ETF. And we can measure that because we can kind of strip out the performance and understand the actual dollar figure that is going into an ETF. And so this is, for all intents and purposes, buying interest and new assets, new capital flowing into these ETFs.
I know you can't get into the full mechanics, but so an ETF, it's not like a regular stock. Say if I want to buy a US equity index ETF and I buy it on the market, am I not buying it directly from another investor?
Correct. That's the difference, is that if you're buying a stock, it's traded on the secondary market, and there is only a finite amount of shares available, unless the company, of course, issues more from the primary. But in the ETF world, the secondary market makers like RBC can interact with the asset managers, and so we can go out and we can create new ETFs. So that's really the beauty of the ETF vehicle, and that's also how we can measure the amount of buying interest and kind of clock this through fund flows. And it really gives us an excellent picture about investor trends, where they're placing their money. And we can see this on a daily basis, actually. So as we're kind of going through these volatile times, it's very interesting to get a gauge on sentiment through ETF flows and ETF interest.
I mean, the ETF that leaps to mind here is BMO MSCI Emerging Markets Index ETF. If we look, I'm just looking at a one-year chart. That one, we have it there. You can see that's been climbing, just to pick one example.
Yes, exactly. Emerging markets have been absolutely on fuego in January. They have seen incredible inflows. So again, that indicates to us incredibly strong buying happening on the market there. And I think that's been driven by two different factors. One, of course, is emerging markets have been very hot. They've had a very strong start to the year. You've had many LATAM countries that are up 15% or even 20% in the case of Colombia and Peru in January alone. So there is some investor performance chasing. They want to be a part of this trade. They want to get long that exposure, so they are buying emerging markets. But I think another facet here is that we're seeing investors broaden out their exposures. And I think that's really at the expense of the U.S. mega cap trade. And maybe investors are getting concerned about valuations or things just looking kind of fully baked in here. So they're looking for other alternatives in their portfolio and how to diversify away from U.S. exposure. And right now, yeah, emerging markets are performing extremely well, and we are seeing investors kind of follow into that trade.
Valerie, thank you very much indeed. Valerie Grimba, Director of Global ETF Strategy at RBC Capital Markets.